You had the University of Michigan consumer sentiment number, the long-term inflation expectation also rising to their highest level in 32 years, which is net negative for the equity market. And, of course, this CoreWeave IPO, which Christina's talked about, which is throwing a little bit of cold water on this whole AI hype hope trade. Again, it's Friday. A lot of people maybe want to be long. Let's talk about it all. Michael Farr, President and CEO of Farr, Miller in Washington, a CNBC contributor, and apparently somebody that's known and been friends with Sarat Sethi for about 30 years. So we got the market wisdom that we need right now. Michael Farr.
Don't hold that against me.
No, we won't. But listen, if I would say Washington is the capital of capital right now. If the market is being moved in part by tariff concerns, what President Trump is saying, whatever, what do we think is going to turn the market around from D.C.?
I don't think anything turns it around from D.C., Brian. I mean, President Trump's strategy and his MO has been to keep things off balance, has to be a bit bombastic in his speechifying, even though when it comes to policy making, you really see where the rubber hits the road. Keeps everybody off of balance. It might be working in terms of getting people to the table, but it doesn't work for Wall Street, and it's torture on investors. I don't think anything changes. I think Washington is now the money capital of the world, not New York. Sorry, folks up there. I wish it were New York, clearly. But as long as he keeps changing the tariffs and keeps changing the numbers, Wall Street has to react, and so does the economy.
So, Michael, I share your views on that, and you and I go way back many years through many investing cycles. I mean, what are you thinking in terms of where to deploy new capital, and also in terms of allocation these days?
Sarat, it's more important than ever to look at balance sheets. There are opportunities out there. And this is when Warren Buffett's making his list. He's not panicking. He's not saying, oh, geez, I got to sell everything. But if you're going to go through a period of uncertainty, we know that time in the market and not timing really makes money. People who invested through the great financial crisis, who got through COVID and everything else, those folks over time who've held makes money. But owning good balance sheets, cash flow, not too much debt, solid companies endure when others really have to scramble. You said earlier, just before I came on, now investors are asking, show me exactly how it works. That's the question they should always ask. It is more important than ever, and you better understand earnings, and the balance sheets are there. But the opportunities are presenting themselves. Stocks, a lot of stocks down 10 and 20%. A lot of tech's getting hammered today, down 4 and 5% alone.
A lot of companies have nothing to do with tariffs. Let me give a different number to our viewers and listeners. It is a scary day. It's a scary time. I get it, okay? But let's also be perfectly honest. This market downturn, which right now, so far, is relatively normal.
8%.
Happens. I've been doing this 30 years.
Right. You get
almost every year this happens.
Yep.
So I'm not being sanguine about it, but it's getting more attention than it would normally get on national news channels. I heard something the other day where they were saying retirees are being wiped out. That literally was a national news show, non-financial media, said retirees are being, quote, wiped out because the market was down 4% over a month. That's ridiculous.
100%.
Okay. In 2022, the S&P 500 fell 18%. Okay. That was 2.5 years ago. The market fell during the summer. We lost 18% 2.5 years ago. The market is up 54% since the lows, July lows of 2022. I'm not making light of this decline. This could turn into a multi-year decline. But what I'm saying, I think, Sarat, is what Michael is getting at, which is this market downturn, while scary and annoying, we want everyone to make money, not lose it, is not the most unhealthy or abnormal thing that's ever happened. I want to be very direct about that.
And I would say 100%, right? Because you actually want to invest. Investing means the market doesn't go straight up in one line, right? And to Michael's point of it's time in the market, and you look for opportunities, and you look for good companies that are going to grow over a period of time. And you got to get some of the air out of some of the ones that were overvalued. But you got to be diversified, and you got to stick within your allocation. And I think this is a reminder to a lot of people who were too concentrated in one area or just were 100% equities and didn't have the risk for it.